So today, before I begin, actually, I wanted to thank you for everybody for joining us for today for Real Estate Friday, for joining us and engaging with us every Monday for Mindset Monday. Today, it's very special day, and for many reasons. And we have a guest with us. We have Freedom Mortgage joining us today. We have Lauren and Eric. We're gonna be talking conversational style on things that to keep in mind for tax season. So I'm gonna go through a quick presentation here, and then we'll have a conversation with Lauren and Eric from Freedom Mortgage. So before I begin, like I said, I'm super excited because finally we have a new book. It's called The Ultimate Guide to Becoming a Top Producing Agent. So this is a combination of everything that we've been doing for Mindset Monday, Real Estate Friday, packed into this book for you to use, and it has a lot more information that I've been working on, and some agents have been working on. We kind of like been putting it all together for you to take advantage of. Our goal is for you to sell more, earn more, and become the ultimate sales machine. And everything is packed in this little booklet right here. But if you stay all the way to the end, I'm gonna show you how you can download it completely free if you stay to the end on this training, and I'll show you how exactly you can do that.
Wow,
So
I like it. $3.99.
there you go. So stay all the way to the end, and I'll show you how you can get this book completely free, especially if you're not part of the Broken Nation Real Estate family yet. So today, I wanted to talk to you guys about the 5 facts to entice home sellers this year, 2021. And to say that the last year, 2020, was an unusual one is an understatement. But unlike many housing analysts predicted, the housing market remains strong, and experts now believe that a crash moving forward is highly unlikely. So there are many reasons for sellers to toss their hats into the home selling ring last year, and some of them still remain the same. And you can use them to your advantage. And I'll show you how throughout this presentation. But when you come across a potential lead who is on the fence about selling in the current climate, you gotta lean on market data and trends and experts like Freedom Mortgage, Nations Trust to show them why right now is actually a great time to do it. So, what are the 5 facts to entice home sellers this year? So let's start with number 1. Home prices are on the rise. Fueled by low inventory and increasing buyer demand, home prices have slowly increased over the last few months. That trend is expected to continue. In fact, the National Association of Realtors chief economist believes that home prices will climb to 4% growth overall this year. What does that mean? Well, this means that it's a great time for sellers to capitalize on the equity that they have built on their homes. But because many buyers might be priced out of the market if prices continue to climb, it's very important for sellers to make their homes stand out from the competition and rely on high quality photos and virtual tours to pre-sell people on their homes. Most sellers will also be able to hold out for higher price offers if they aren't thrilled with the initial offers they're receiving. Now, all this is great information to keep in mind and to share, especially with for sale by owners and perhaps expires. But let's go to number 2. Interest rates are at historic lows, right, Lauren? Eric? They continue to be all-time low. A few weeks ago, actually, the average U.S. mortgage rate for 30-year fixed mortgage fell to an all-time low of, I think, 2.88%. And you guys can correct me if I'm wrong, and that's according to Freddie Mac. So it's really low. Of course, these low rates are a major draw for potential buyers looking to find their next or their first homes. But these low interest rates also spell good news for home sellers. As interest rates continue to fall, more and more buyers will enter the market, resulting in increased home demand and higher sales prices. Now, we all been seeing this lately. And number 3, obviously there's the downsides to it, but also a great opportunity. And that is inventory remains low. While low inventory means more competition for buyers, it also means sellers gain the upper hand in most transactions. Homeowners who choose to sell can benefit from this increased competition. That's why we need more inventory. For 3 consecutive months, Redfin reported that more than half of its homes had multiple offers. And we don't need Redfin to tell us that. We've seen it firsthand of what's going on. But the data found there said that 56% of single family homes had multiple offers, followed by 54% of townhomes and then 42% of condos. Again, we don't need that data to realize that what is really going on in the market right now. This increased competition for houses means higher prices and potential bidding wars. And that leads me to number 4. The home equity is unlikely to drop, right? With most housing markets at low risk for a downturn, the 2021 Housing and Mortgage Market Review estimates that home prices rather, will continue to rise for the next couple of years. So that's great news for us. But what does that mean? That means that homeowners just starting to think about selling will likely benefit from increased prices for the foreseeable future. Again, excellent news to share with possible for sale by owners, ex buyers, SOI, possibly people that own a home and thinking about selling. You can use this to persuade potential leads to enter the market by offering them a free home value estimate, professional photos that are for sale by owners. You can add some value to these people as well. Just think outside the box. What can you offer them today to entice them to sell for this year? And number 5, virtual showing tools means less people physically walking through homes. Now, keep in mind that some people might still be um, worried about people physically walking through their homes. So keep this one in mind. Virtual showing tools. By now, real estate agents, all of us, have perfected the art of showing homes during the pandemic. And in addition to thoroughly sanitizing the properties and mandating mask wearing during showings, we all have increasingly been using video tours and virtual tools to give buyers a more realistic pictures of the homes that we list online. And think about ways, again, think outside the box. What type of video tours? How can you become the go-to person? And how can you become the expert? And how can you use videos to show this and show this property and at the same time entice the sellers to see the potential in using you? Now, these tools act as a weeding out tool so that the buyers who do schedule in-person showings are likely more serious and pre-sold on buying the homes that they tour. Even the most anxious homeowners can be convinced by now that it's a great time to sell if you take the proper precautions and put together a strategic virtual marketing plan to sell their homes with the least amount of foot traffic. Now, this brings me to my next point, and that is to effectively working with buyers and having the latest information at hand. That's why I invited Lauren and Eric today from Freedom Mortgage to join us today and talk a little bit about what is going on in the market today. What is this? What do they see? And also how can we can take advantage of the current tax season to be able to work with better qualified buyers, and how can we bring that value over with the sellers? Hey, Lauren.
Hi. Yes, tax season is upon us, and I've been getting lots of questions from buyers and realtors about taxes. So I thought it would be a great time to talk about it just a little bit. The main points that I think are helpful for realtors to know and can kind of pass that on to clients and continue to add value to the relationships with clients. So the first thing I wanted to talk about was us as lenders and the bank. How do we look at taxes? How does that affect them in the lending process? So I wanted to talk about the two most common, which are W-2 employees and then self-employed business owners. And with W-2 employees, we ask them for 2 years of tax returns and of course their two most recent pay stubs, but we really use an average of the two. We kind of combine them all and average that out to come up with the pay that we use to qualify them. W-2 employees are the easiest ones to process as a loan officer and to get you guys a great idea of what they're going to qualify for. And of course, in Miami, we know that we have a ton of self-employed people. Everybody here has 3 or 4 jobs. They have side jobs. They're all doing that side hustle thing. So we get a ton of them here, and they're a little bit, I don't want to say difficult, but a little bit more involved in the process. The biggest obstacle we have with self-employed, which I'm sure every realtor has come across, is that people want to expense everything in their business because they don't want to pay taxes, and then they want to qualify for their dream home. And really, there's no way around that. Clients try to get as creative as they can, but there's no way around. You have to basically bite the bullet for 2 years, pay taxes, declare, as much as you can, pay taxes on it so that you can qualify for a home. I had a few weeks ago, I had somebody that was a barber, and he makes great income, but of course, the majority of it is cash. And he had on paper minus $2,000 in income for 1 year, and I think maybe $5,000 in income the next year. So of course, we averaged that out. He doesn't have any income, and we couldn't qualify him. And there's just no way around that. The only answer we have is now you got to wait 2 years. You got to declare everything that you make and pay the tax, and then we can take the 2 years and we average that out for self-employed, and that's the income we use. So a lot of people now are about to prepare their taxes, and something that I advise realtors that I think is helpful is if clients are asking you, again, we're not tax consultants and we can't give too much advice, but we can give a little bit of general guidance, and we can request drafts of the taxes before the client submits it, look at it, and possibly raise any red flags or tell them, look, this is what you're looking at if you send that in. So I think that that's a good idea. If you have somebody that's asking you questions about their taxes, especially when it's self-employed, maybe have them send us a draft as the lender, let us look at it and tell them this is what you can expect to qualify for as is. And then they can submit it if they want. They can make changes if they feel that it's not enough. They're not qualifying for enough. And that's really, really good to know right before tax season. So those are the main points I wanted to touch on. The other thing I wanted to mention that I think a lot of people don't realize is if you're self-employed, you have your own business and you have a car paid through the business, if you have 12 months of bank statements showing that the business account is paying your car, we can remove that from the client's debts, from their liabilities. And so that can help people. I've had a few loans that the difference of the car note and what they pay every month was the difference of them qualifying for what they wanted or not. And a lot of people don't know that. So that's a good thing as a realtor to keep in mind when you talk to self-employed people. Another point here that I had was we have a program. It's called Freddie Mac. For some self-employed people, they qualify for only 1 year of tax returns that we review. And this is helpful for somebody that might have had a bad year 2 years ago. They didn't do so well. And then this recent year, they did great. There's a lot of people that in the pandemic, believe it or not, have done really well in business. And so for those kind of people, we can only look at 1 year, and that means less questions from underwriting, higher probability of getting approved, and we only have to use, you're not tied to 2 full years of income. So that's a great tool for people that might give you that as an objection as to why they're not ready to buy. If 1 year they did great, we can try to submit them and see if we can qualify them. So that was another point that I thought was good to bring up to realtors. A lot of people don't know. Oh, one thing to note on that program, they have to be in business 5 years minimum. So it has to be a 5-year, open 5 years. We can look at 1 year tax returns. The next thing I wanted to touch on was, let's see here. Sorry, I'm looking at my notes here. I want to make sure I don't forget anything. Oh, to keep in mind with self-employed, there are many different kinds of businesses. There's sole proprietorship, there's LLC. So we need to determine what kind of business they have and also how much ownership they have in the business to determine what documents we need from them. Most of the time, it's the 2 years of tax returns, but depending, we might need profit and loss statements. So that's always a good question to ask the client when you're qualifying them as realtors. You're self-employed. Okay, what kind of business do you have? Is it a corporation? Is it a LLC? So that's another thing that we look at first when we're qualifying. Eric, did you want to add anything? I don't know if anything that you were thinking.
You've done great.
Lauren?
You've done
That
great.
was amazing. That's a lot of tools to work with.
Hey, Lauren, on that Freddie Mac program, what's the minimum down payment?
It depends. It can be 5%. Most of the time it's 5% for the buyers. Yeah.
Okay, thank you.
Anyone else have any questions? I was going to open up to questions anyways, but I don't know if anything I said, anybody has questions or general tax questions that maybe clients are coming to you guys with that you might want to ask.
Yeah. On that program, the rates is still the same or it's a little bit higher?
Yeah, it's Freddie Mac. Remember, Freddie Mac is basically, it's a government-owned corporation. There's Freddie Mac and Fannie Mae. So it's the decision engine that really determines that. So, I mean, it's the same exact thing. You still have, the first-time home buyer programs and everything, Freddie Mac, as low as 3% down. And yeah, it's not a higher interest rate at all. It's just a bonus that Freddie Mac has right now in determining income. Think about the luxury we have right now. I know you guys are getting questions from borrowers like, hey, it's tax season. How do I do my taxes? Should I reflect the most, especially when it comes to self-employed? Well, the luxury that we have right now, again, we're not accountants in any way, but the luxury that they have is that they can actually, if they've owned their company for 5 years and they did struggle the year before, they can technically go ahead, file their taxes this year already, get everything in order, and actually be able to qualify. At the end of the day, whether you're W-2, self-employed, 1099, whatever it is, the best advice you could give your borrowers once they're in the market for purchasing a home is reflect the maximum income possible. It's really where it's really the best advice that we can give them. And again, that's W-2 or self-employed or anything like that. And I think that's great to know, going into this year at the beginning of the year, because we have that luxury that people are getting their taxes done right now. Especially those borrowers that maybe you couldn't get qualified because of their 2-year income history. Think about that. Think of the borrowers and the files that you probably had denied to where you can go with the 1 year Freddie Mac program. Right now, keep in mind the minimum credit score for that is almost as far as conventional, the same decision engine, that we're running through right now, which is conventional. We're looking at 680s, 700 and above, to make sure that we can put a stamp on it. Now, there is possibility as well that with Fannie, in some cases, depending on credit profile and overall strength of application, that Fannie itself, when you're running your DU, will ask you only for the previous year, right? So Fannie will ask it to you, then it goes into an underwriter review. You could lose that ability, to where with Freddie, you don't lose that ability because you have that guarantee of 5 years in the business. But both of them could, in essence, give us that decision on a decision engine. And again, we basically, as lenders, pretty much only submit strength of application due to what DU tells us. So if DU says 1 year, we're submitting 1 year. What other questions do you guys have? What do you guys, I mean, as far as what Delana asked, what we're seeing in market, the market's hot. Don't have to tell you guys, in some cases, you don't have to even do an open house anymore, right? And if you are conducting an open house, it's basically for lead gen and the lines around the corner. So the market is hot, inventory is scarce. Even with all of that said, the projections are that we're going to have an increase in sales this year, which is great. And yeah, the interest rates are still very, very low.
I did want to add one thing that you reminded me now, Eric. Any agents that I'm working with that I do pre-approvals for, or if you want to start doing pre-approvals with me, I have found a lot of success. The last couple of agents that have told, when they're representing the buyers and they have given the pre-approval on the offer, and they've told the buying agent, the buyer's agent to go ahead and call the lender if they had any questions. Every single person that has called me, every listing agent that has called me to ask about the file, ask the strength of the file, they have gotten under contract. So I think that's a great tool for realtors, especially now with all these offers going in on houses and the competition. Feel free to tell them to call me. My number's on the bottom of the pre-approval. I will take the call, and I am going to put your client up on a pedestal and say everything wonderful about your client to get that house for your client. And it works. I mean, the proof is in the last 2 deals I've had, I've done that. And within the next day, contract was accepted and we're moving forward. So that's another tool that I want you guys to know that I'm always here for as well.
That's a fantastic point. A lot of you guys get asked by listing agents, and even when you're the listing agent yourself, you ask for the DU. Now, keep in mind, just as a pre-approval could, DU could be manipulated, right? A DU basically shows the listing agent the strength of file. It's really what it is. It shows the strength of the application. Let us sell it for you verbally, right? Let us put our mojo on it. Lauren could not have made a better point. We're a team, you know? So if they're calling you for that, if they're asking you for that, they want you to sell the loan. One thing is I could send them a DU. Another thing is having a lender actually call a listing agent. Whoa, that doesn't happen, right? Every time I'm on the lending side and I call the listing agent and we bring them in the beginning, and Lauren can attest to this, the listing agents, most of them say, wow, I've never had a lender call me and bring me in the beginning. But that's everything, you know, that's everything. And now with all these different chats and WhatsApp and Signal and all these different things, I mean, I know you guys are probably seeing it now. We try to bring everybody in together in the beginning. So once we get a contract in, we try to create these, you know, we try to create these chats so that everybody's on the same page. But yeah, the luxury you have partnering with us, partnering with Lauren, is exactly that. We're a team. Let us help you sell the loan. And like she said, for the most part, the last couple loans that she's actually taken it upon herself to reach out, we've gotten contracts in for our customers.
Guys, can you talk to us about the condo market lending? You know, houses are in short supply, but condos are, you know, plentiful. So what kind of programs do you have for that?
When it comes to condo, and Lauren, if you don't mind, I'll take this one.
Yeah, sure.
When it comes to condo, everybody, you know, there's limited review and there's full review, right? And Florida is one of the only states that requires a 25% down on the limited review still. Most states have already adopted a 10% down equivalent. So the thing is here, you know, we all know what happened. I believe it was in 2013 with FHA in the condo market. They tried to bring the spot approvals back. We all know that those really didn't make an impact the way that we wanted to, right? So at this point, it's explaining that there's really no product for condo. The way to excel in our condo market is to have a lender that could provide you with the information on the condo as quickly as possible. So you're starting to see these major lenders in our market start to have their condo, it's called like condo gathering departments, right? So for us, because of our condo market, and the one thing on our condo market, or in qualification of condos, the one thing that kind of, you know, makes loans kind of go away, so to speak, is the budget, right? That is the main thing. Why? Because the budget is ran by a board. Now that board is required to pay those monies back if they use it. Problem is that it doesn't happen. And then what happens is you start running a shortage of the budget, right? So with us, if there's ever a contract, if there's anything like that, and we look at everything in regards to a condo, I try to get you guys the information before you even go under contract. So if you like, if the customers that you're with, you guys already know the luxury you have working with Lauren is that you guys could be standing in the condo, touching it and say, hey, Lauren, run us the numbers for this condo for our borrowers. And then at that point, she can compare those numbers to that. Well, at the same time, the conversation is going to be, hey, I only need 3 things. I need a condo questionnaire, I need a master insurance policy, and I need the budget. With those 3 documents, I could send it to our condo gathering team and within 24 hours know if I can go with a full review, which is basically 20% down or less. And believe it or not, I've closed condos with first-time home buyer conventional products of 3% down. It has happened, but the condo has to be approved, right? So once the condo is approved for financing, we start to kind of see where we can kind of go in. Once we have a particular customer that doesn't have the down payment that we know is going to be a little bit of struggle, they're going to have to go full review in order to get the benefit of the less than the 20% down. Then at that point, we would go ahead and provide those 3 documents to the condo team before you go into contract so that we can save you some time. Now, there's also a couple of different products that are kind of thinking outside the box, right? I don't know if you've ever heard of a 75-10-15, right? A 75-10-15 allows a borrower to go through a limited review as if it was 25% down, okay, on a condo of their choosing. Now, the most easiest, keep it simple way to explain it is it's a first and a second. So it's a first and a second, takes care of the limited review. Your borrower ends up bringing, I believe it's about 9.99% to the table. So it's a way of still getting them into that limited review with only 10% down versus the 25% down, right? We know where our inventory.
Eric, you muted yourself.
Okay, computer was possessed. But anyway, but yeah, we always try to come up with creative ways, and banks are starting to kind of get in tune to that on how to get borrowers into these condos. And like I said, Florida is one of the only states still that has a 25% limited review. And a limited review, to be real with you, the only thing that a limited review, it ignores the budget. So a limited review ignores the budget, which is 25% down. But there are ways to get in there with less. It really depends on the lender that you're working with, if they have the ability to provide you with that answer as quickly as possible.
Yeah, and the fact that we have a whole condo review department, I mean, not a lot of lenders have that. And they're I sent them a very complicated condo question the other day about a specific litigation in a building. And within the day, they had a whole, 1-page answer for the realtor that I don't know how anybody would get that information, so fast. So that's a tool that we have that then we pass it on to the realtors as well.
Yeah.
That is really, really interesting. Do you guys have any other question for Eric or Lauren?
When you're saying a 75-10-15 and it's a first and a second, how does that break that down? Because there's 3 figures there. How do you do 2 loans?
Because it's basically 75 on one, 15 on the other, and then 10% down.
Oh, I see, 10% down. Okay, got it.
I know, these acronyms are fantastic, but yes, even with numbers, 75, 10, 15. And again, it's all a lender's job. Everybody knows it's about fitting a square peg in a round hole. And when it comes to our condo market down here, that is exactly what we try to do. Now, there are exceptions in some cases that we can make, in regards to a low budget. I always say before telling anyone no, let your lender in on the budget, provide us with that information, let us read the budget. Even the association at times could say our budget's not on point, and by the time our condo department reviews it, like, no, they just had this here and there actually are 10% reserves in there, you're good. So always let us review it for you, especially if you have customers that are really interested in a particular condo. Get us involved early. Send Lauren, like I said, 3 things, all we need. Send Lauren condo questionnaire, the master insurance policy of that condo, and the budget if you can. And then at that point, we'll try to get those customers the best home loan possible to get in there.
Very good. Thank you guys so much. Anybody has anything else to add or any questions you want answered?
I'm sorry to keep bugging you guys, but on the reserves, is 10% the minimum?
Yes.
Okay, thank you.
Guys, also, can you guys chat about jumbo loans? I know that obviously we're in South Florida and it's more common than not that all these properties are going to be jumbo loans. What are your rates like right now, and what's your process with jumbo loans?
Well, jumbo loans, the program and the actual product that we use right now is through Paragon. And I could talk to you about it now. Now, our sweet spot, the same thing I tell our realtors, right? Not every company can do everything. What matters is how you present that information, right? So just to give you an example, somebody asked me for a physician loan, right? A doctor's loan. I'm going to refer them to SunTrust. SunTrust has the best doctor loan that you could possibly have, right? Now, our wheelhouse is a loan amount max of about $2 million, right? With an 80% LTV. Now, keep in mind that comes with a credit score of over 740, right? The interest rates on these particular loans are elevated, but not as elevated as a jumbo, right? Not elevated as you think. We are very competitive, but there are points to pay on most of the interest rates when it comes to these jumbo loans. The key here that we try to do, again, being creative with our new conventional, loan limit and everything, whether that's piggybacking it with a second to kind of keep it under, so that way our borrowers can, get a better interest rate and a better product overall, and keep it here versus sending it, to Paragon. That's what we try to do. But jumbo rates are always elevated in market. We underwrite the same exact way, but our max loan amount would be in that $2 million range. That's our wheelhouse. Anything above that, it's basically different investors that we're actually in the process of reactivating again. Because even with jumbo, just like non-QM and things like that, most of it was like frozen because of the pandemic. So they're actually starting to come back now. We actually had a couple of investors when it came to jumbo, and we just got two of them back, Quorum and Allegiance. So those of them are right on par with your typical interest rates. But yeah, unless I ran a scenario for you, I mean, I ran a jumbo, I want to say like 2 days ago, and we were right at, I believe, either a 3.125 or 3.3 around there. And that was on a $1.5 million loan, 747, no, 730 something.
That's still a great rate though. That's awesome.
Yeah, no, it's great. Most lenders you're going to find when it comes to that loan amount, it's 75% LTV. We're still very much at 80, which definitely helps our borrowers. It just has to be over a 740 credit score.
That is awesome. Right.
Yeah.
So far, what I hear is that it's a lot of options. It doesn't matter
Oh,
which way you go. There's still plenty of options for us to use and stand out from the crowd. So that's why I wanted to talk to you guys today, because one of the issues we're having is obviously low inventory, right? So we got to figure it out how to put a plan together and show some value to the sellers. And one of them, showing them that we can get the right buyer, we can get a qualified, ready to go buyer. It doesn't matter the price point, but we have the tools needed and we have the right vendors. So thank you so much, Eric, for and Lauren for joining us today. Marta is joining us as well today from the title world. Marta, what's going on? How are you?
Hi, hello, everybody. I can, you know what, that information that Eric and Lauren provided is right on point. And I can tell you, I can give you that recommendation to Freedom Mortgage because we have closed some loans with Freedom Mortgage, and I can attest to that. The value of having a great team on board and being proactive and those relationships, that's what it's all about. That's what it's all about. And every time I sit in on one of these meetings, I see the value that Broker Nation adds to that broker relationship. So if any of you real estate brokers need a reference as to Freedom Mortgage, I can give you that reference because I'm actually closing the loans and I'm getting those emails wherein from the moment that they take in the client to the moment that they close the loan, you're getting updates, on a weekly, sometimes on a daily basis, you're getting updates. So, the value of that relationship is enormous. So thank you guys for the job that you do, because it makes my job easier. And I see that it also makes the realtor's job easy. So thank you for that. On the title end, I can give you a little bit of an update of what I'm seeing, especially with the condominiums. Now these condominium boards are now, I've had a couple of files that we've had some issues where the condo board has passed a special assessment. The realtors have done a great job about disclosing the special assessments to the buyer. Seller has disclosed it. Now, what the condo board is doing is they're requiring the full amount of the special assessment to be paid at closing. This is very important. Sometimes the seller is supposed to pay for that special assessment. No problem. Sometimes the seller is getting enough money to pay for that special assessment. But sometimes on the condominium addendum, the realtors have put that the buyer is going to pay for these assessments. Sometimes it's an assessment of $20,000. Yes, it's payable over 20 years, but now your condo board says that it's got to be paid if there's a transfer of the unit. So I just like to point that out to realtors when you're signing a contract for a condominium, to pay special attention, to ask those very specific questions. Is there a special assessment? Yes, I know everybody's got that down pat. If there is a special assessment, now we need to ask, is that amount going to be due at the time of closing? Because that makes a big difference to your buyer. If he has to come out with an extra 20 grand at the time of closing, and some deals can be broken because of that. So that's just a couple of I've had a couple of files that have been very challenging there at once we receive that estoppel letter, when we find out that that special assessment is due at the time of closing. And we're here to help. Let us know if we can.
That is great information, Martha. Thank you so much for sharing that and pointing that out, because sometimes that could become a big issue when we get closer to the closing table. So thank you so much.
Thank you.
Oh, Delon, I forgot one point that I wanted to bring up too, that I can assist agents with. If any of you guys have open houses, I am happy to attend and qualify buyers there at your actual open houses, get their information, and that way you have the inside scoop on exactly what they qualify for and if they're good buyers for your listing. So that's another thing that I can do, and I'm happy to go to. So just wanted to put that out there.
Will, you got an assistant? That is fantastic.
Yeah, she's my lead generator over here.
That's kind.
Okay, lead.
Eric, Lauren, Martha, thank you so much for joining us today again and bringing some value to the presentation today for Real Estate Friday. In fact, you know what, I'm big on working with the right team, and that's why I appreciate your time, Freedom Mortgage and Nations Trust, for joining us today and always giving us the latest update. And I highly encourage all of you, if you're not using Freedom Mortgage or Nations Trust for your transactions, I highly recommend them. So much that, remember I talked about the book? Guess what? And by the way, Lauren, you're in the book. There's a section here that talks about the vendors, who to use, what to use them, and some of the value that you add. Martha, you're here as well. So we go based on the people that are helping us to close more transactions, more deals. So if you're interested on see how they can help, there's a whole chapter that talks about creating that value add and using the right vendors. So again, this is for you guys. I encourage you to get it as soon as you can. I have the digital version available for you. And like I said at the beginning, I'm gonna show you exactly how to do it. So who's interested?
You got to give me one with an autograph. If not, I'm not gonna take it.
You got it. I'll send it over to you. So for all the agents here, because I think everybody that's joining us today is part of the nation's Broker Nation. So for you guys, all of you, when you join Broker Nation, you're part of the revenue sharing program, right? Even Freedom Mortgage, you guys, Lauren, Eric, you could potentially be part of the Broker Nation revenue sharing program. Martha knows this as well. So we want you guys to, one, work with the right people. Second, get the right tools to succeed. But most importantly, build that career, build that business within the business. And we want to help you do that. That's why this book was put together, to help you grow as an agent, but also to help you increase your network of agents that you can potentially have under you. So if you haven't heard or you don't know exactly how the revenue sharing program works, I encourage you to call me and we'll talk about it. I'll show you exactly how it works. But I'm gonna assume that all of you know already, because when you join Broker Nation, we went over this. So for you to get this today, right after the meeting, I'll send an email with the link so you guys can download it, start reading it, and go through it. It's really, really interesting. But for you guys to do this today, the only thing I'm gonna ask from each and one of you, and I'll tell you the benefit of doing that, is to send me at least 5 agents that you have worked with, that you know, that are not part of Broker Nation family. Okay, why I want to do that? The reason why I'm asking for this is because I want to be able to help as many agents as I can. As a company, we want to be able to provide value to the agents out there. Okay, people that are struggling right now, they don't know what to do, how to do it, and we want them to see that there's more out there than just having a real estate license and having another job. You can build a career that will last forever, and it's willable. That means that you can benefit your family. You can leave something behind for them when you decide to leave real estate. So the only thing I'm going to ask today is if you send me an email, by the way, Steve, you can put my email address on the chat. If you send me an email with a list of at least 5 agents, I'm going to send you the digital version of the book, but I will send you an actual copy as well. Right? And we'll have it here. And we're putting together a whole mentorship program around everything that's in here. Again, this is for you to benefit from what the opportunities that we have today in our market. Okay, how to partner with the right vendors. How can we help more people? I really want to help more agents. I want to help you. So help you, help us. So send us at least 5 agents and you will qualify to get this book today, along with the actual copy of the book. So thank you so much for joining us today. Again, my email is in the chat, dailan@brokernation.net. So feel free to copy that, take a picture, and send me the 5 agents. If you send me the 5 agents, I'll send you that today. No questions asked, and you have it before the end of the day. All right, guys, thank you so much for joining us today for Real Estate Friday. Eric, Lauren, thank you so much. Marta, I really appreciate you. I appreciate all of you guys for joining us every Friday, and I'll see you guys on Mindset Monday. So stay tuned for that and register if you haven't done it. All right, guys.
Thank you.
Bye.
Thank
Have
you.
a
Bye.
great week,
Have a good
everyone.
weekend.
Bye.
Bye.
Guys.
Bye, everyone. Have a great weekend. Don't forget to request your book, Daylon@brokernation.net, and check for our next event at www.brokernation.events. Thanks, everyone. Have a great weekend.
Bye, everybody.
Have a great weekend all.